folks. You guys are joining with me in Echelon Talks from Dubai right now. And we're having a very important guest today. Let me introduce him, Avraham Avi Pinsky, who is the CEO and the founder of Pinsky Consulting from Jerusalem, joining with us. Hi, Avi.
Thanks for having me.
Yeah, Avi, let us know a bit more about you because I have know about only from Pinsky Consulting and give us more interesting fact about you.
For sure. So I live in a small town called Tel Tzion, and it's about 20 minutes out of Jerusalem. I'm originally from Los Angeles, California, and just about a year or so ago, I started my consulting firm. I was doing accounting for about a dozen years or so, and I realized that doing taxes as an accountant is not as rewarding as I thought it would be. So I decided to open up my own consulting advisory type of practice where I teach business owners how to analyze their finances and their numbers and how to understand them in a way and use a systematic approach to growing their business based on the data that they can garner from their financial statements instead of kind of going flying by the seat of their pants, just kind of going based on their intuition and their gut. It gives them a systematic approach to growing their business and make sure that they're using data and that they're making the right decisions to grow in a more smart way instead of kind of just guessing what the best moves are.
True. And Avi, when it's come to the business, the one question which is strike on my mind, how we find the motivation to run a business or scale the business of service industry and manufacturing industry, and how these two will be differentiate from your point of view.
So from my point of view, I mean, everything comes down to the numbers. So while every industry is going to have slight nuances, the general format of financial statements are going to be very similar. And I like to tell people to look at things kind of from a 30,000 foot view of the business. Not to if you're the business owner and you're trying to scale, you're trying to grow your business. You can't really look at all the minutia. You kind of have to look at things more broadly. And from a broad view, all businesses are the same, numerically speaking, right? They're all going to have assets. They're all going to have income, liabilities, expenses. There's a very limited amount of things that can differ from one to the next. A manufacturer might have an inventory account, whereas a service-based industry probably might not. But that's really a minor difference when it comes to looking at the business from the holistic view. So yeah, I mean, you do have to know each industry what's a normal amount of inventory to carry, because maybe one industry might be different than the other. But in terms of understanding how the inventory is impacting your business, that's going to be universal, because that's just understanding the basics of business, which unfortunately most business owners do not understand the basics of the financial aspect of the business.
Yeah, true. Because I raised that question, Avi, even in the tweet, one of the business owner asked me, right? He's a kind of a startup guy. So he's looking for a manufacturing industry. And I have asked the question, why you focusing on the manufacturing industry? Because you're having some background on service stuff. And he's saying, no, it will add the value and we have the stock and we can build the buildings and physically it will be available. But if it's come to the service sector, we can, nothing is intangible, right? At the end point of view, in the books, we are showing a high number of goodwill and all. So he's arguing on that point of view. So what do you think about it in your point of view in book value of the company when it's come to service industry and the manufacturing industry? Is it a real argument, or in a way of income wise, which one is better, or both are same in your point of view?
So, in terms of which industry you want to work in, it really that's more an individual question of where do you find your drive to grow your business, right? Where you can make an impact and where you're going to get that enjoyment, right? I mean, just taking myself personally for an example, as a business owner now myself, I was not enjoying what I was doing as a business, as a tax accountant. So even if I may have been good at it, and even if I was able to continue doing that, I didn't have the drive to continue that for the rest of my professional career. So if somebody is finds that desire in one industry versus the other, that's what I would say. Go with the one that's gonna speak to your passions. In terms of the numbers and how that should play in your decision, again, you can make $1 million a year doing a service. You can make $1 million a year manufacturing. You can make 10 million doing each, and also
True.
you can lose your shirt in each also, right? So it's not you can't say, well, one is going to be more lucrative than the other. It's all a matter of how well you can grow that business. And from my point of view, it's how well can you understand the facts and the numbers behind the scenes of that specific business, so you can use that data appropriately. Right? If somebody understands services and they don't understand inventory, I would say don't get involved in manufacturing, because you're going to have to understand how that impacts the business.
True.
But yeah, that's kind of the way that I look at it, is do what you're passionate about, and make sure you have an understanding of how the business runs. Because that's really one of the biggest pitfalls that I see, is business owners getting into something that they're very good at, the service or the thing that they're doing, whatever that job is. But as their business scales, there comes a certain complexity to the business, which unfortunately they're not trained at. Right? When you want to open a business, there's no business owner school that you have to go to and get certified in. If you're let's say an air conditioning technician, so yeah, you get certified in HVAC, but you're not getting certified in running an HVAC business. So as that business scales, you get a lot of problems that you weren't prepared for. So do what you're good at, do what you enjoy, but learn how to be a business owner as well. Don't just say, well, I'm really good at being an HVAC technician, so let me open up my own shop. That might start out well at the beginning, but as it scales, you might run into some issues that you're not prepared for.
That's a very good answer, Avi. I have to say that. And Avi, I have to ask one more thing, right? Even I have seen in social medias and the promotions, and the business owners also seeing and asking me the question, that making and scaling the business from 6 figures to 7 figures. So it's a kind of a attempt increasing the capacity by 10 times, or the income by 10 times. So 6 million and it's going to 60 million. So in this kind of scenario, how are you finding the things to boost up the business, or is there any kind of strategies? So why actually the business coach and all using this term, especially 6 figures, 7 figures, and 8 figures? So actually, what they're based on? It's a value of the income, or it's a value of the business? So what is the clear cut on it?
So from my point of view, I like to look at things in terms of universal truths and universal principles. Kind of how I like to live my life in general. But in terms of business, all businesses have those same, like I said at the beginning, right? They all have assets, they all have liabilities, they all have equity and expenses and income. So it's just a matter of understanding how those principles apply to business in general, and then how they can apply to your specific business at the size that it currently is, right? They apply across the board, whether you're talking about a mom and pop shop that's just starting out, or a Fortune 500 company that's who knows how many generations old. It's the truths are there, right? Business is business, right? Income and expense is going to equal your profit no matter what. How you can use them to scale. So, essentially, when you're talking in terms of revenue, there's really 5 numbers essentially that you can focus on if you're trying to make that jump from 6 to 7 to 8 figures. Again, the universal truths are still going to apply no matter how big your business is. But if that's your focus, if your focus is to say, I want to become that $10 million company, so there's really 5 things that I like to focus on at that point. There's how many leads do you have, right? How many potential customers can you find? Can you market to? What percentage of them can you actually close and convert into actual customers? The third number would be the existing customers that you've had in the past. How many of them can you retain on an ongoing basis? The fourth would be how much are you charging for your service, your product, whatever it is? How much is the average customer spending in your shop or in your company? And then the fifth thing is how often are they buying, right? How often are they walking into your store, walking into your restaurant, or calling up your plumbing company, whatever it is? So when you take those five numbers and you apply them to your business, those are really the things that you can focus on to grow from a 6 to 7 to an 8-figure business. It doesn't, those things are universal, right? If you move from 6 to 7, it doesn't mean that you can now ignore one of those 5 factors. If you want to go from 7 to 8, you don't ignore any of those 5 factors. They're all going to be there for all businesses. And which one you want to attack, so that's going to depend on how your business has been doing and where your business is currently holding in its life cycle. Some of those numbers might be easier to affect than others in order to help grow that top line to to that next level that you're trying to reach.
Mm-hmm. And Avi, when it's come to the businesses right now in the market, we are seeing a lot of these tech startups are coming into the market. So they are coming up with a new kind of solution for the problem the humanity is facing. And all our tech companies, after the rocket high price of Nvidia stocks, these all tech companies are coming, in a line by line. So in a case of startup, but we actually witnessing some stuff. So there are some businesses which are older, like 15, 20 years old, classic businesses. And these startups are earning like 2, 3 times compared to these classical businesses. So how do you viewing this trend? Is it actually a kind of a bubble, or it's really they are making the money?
I mean, you'd have to kind of really assess each business by itself to see where it's truly holding. I know we just spoke about revenue, but
Uh,
one of the big things that you
Avi,
want to keep in.
yeah, sorry for interrupting,
Yeah,
because I have seen even in medias, these startup companies are coming into the market and they're going for fund collecting round 1, round 2, and round 3. And, they are accumulating like 200, 300 millions at the end. And at one point, these businesses are disappeared. Or in some point, big companies are acquiring these small startups. And somehow these companies are alive in the market. But I have no idea this trend is real or a bubble, or what actually happening in the tech market.
so I'm not an expert in the tech market specifically. Something that you have to keep in mind with businesses in general is not just a matter of their revenue, but also their profits, right? Once I take into account expenses, so where does that leave me? So a couple thoughts come into mind. The are these more established companies, are they taking specific expenses to lower their tax bill, right? Sometimes that's, they'll take on more additional, they'll front load some of their expenses to lower their tax amount. Another question is, are these small startups, is it just that they're finding investors that are very gung-ho about an idea, so they're getting a lot of that cash infusion at the beginning, but it could be that the business model itself might not be as profitable over the long run. Or it could be just a matter of, we're talking technology. Technology always gets people excited, right? So, everybody wants the newest iPhone, the newest gadget. So that could be a part of it as well. Sometimes you kind of have to adapt or die in certain industries. So those are just kind of a couple of thoughts as to what might be happening. People are seeing some new technology. Everybody's getting really excited. Everybody runs to buy it to be the first one. That doesn't necessarily mean that company can, exist for 10, 15 years down the road. It doesn't mean that not necessarily that it won't, but new things are always exciting, especially when it comes to technology. So yeah, those just a couple of my thoughts that come to mind when discussing startups and tech. But again, you'd have to look at each company on an individual basis to see where it's really truly holding, whether it's really profitable. And the same with the ones that are in a loss. What's the cause of that loss? Is it because of, like I said, that they're trying to front load expenses to lower their tax bill, or is it that really that company is dying? And that is one of the things that I work with my clients on, is trying to figure out what's the true health of the business, right? Are we actually dealing with a business that's salvageable and could be profitable, or are the numbers really telling us that it's time to abandon ship?
Yeah.
Hopefully it's not in that category. Hopefully I can look at the numbers and see this is a healthy business. It's just maybe it's on life support and we have to try to figure out how to give it that blood transfusion, so to say, and bring it back to life. Or maybe really it's a healthy company and you just didn't realize it because of some external factor that we can really easily tackle. So that's kind of what I look for when I'm looking at the numbers of a company, is what's the actual health of this specific company.
Mm-hmm. And Avi, I have to ask one more question, which is very important to these entrepreneurs. I have to say that these people are thinking, the investors, right? They want to be a leader. At the same time, they're trying to become a leader, but always this management task and managing the business and these meetings, these meeting minutes and managerial stuff and changes inside the business and policy making and everything. So this kind of task always a hindrance to these people to become a leader, because they have no time. Everyone have 24 hours in a day, and these people spending more than 90% of the time in managing the business. So how can they
100%.
be a business owner and a leader at the same time? So what is the solution for this, and how you see in this point, Avi?
So that's kind of what I help my business owners do. We I want to help them get out of working in the business and working on the business, right? Going back to that HVAC technician, or let's say a chef who's decides, let me open up my own restaurant, or a construction worker who says, let me do it myself and open up my own construction company. The job, but when it comes to running the business, they don't really know what they're doing. So what I help them do is really focus on the bigger picture, getting out of the minutia of running the day-to-day operations. And the way that I do that is by, again, analyzing the numbers, seeing what aspect of the business has to be adjusted in order to meet the overall goals and targets for their business. Once we figure out which areas are the problem areas, we can then try to create objectives on how to bring those areas back into focus, bringing them back onto the path that we want the business to be heading towards. Excuse me. And then we can also bring it down into smaller action items that can be delegated much more easily to a team once it's broken down to a smaller bite-sized piece. And that really helps the business owner stop being the primary manager, the primary worker in the job, but helps them really learn how to manage their team and lead the team and say, okay, this is what we're focusing on. You, Joe, and you, Betty, you go take care of those things. I'm going to stay back. I'm going to keep looking from the top and making sure that it's all going right. But that is the primary issue that I find with business owners, is that they know that something is wrong, but they don't know what. So the only thing that they know how to do is to keep doing more and more of the working, which then means they're working many more hours, which essentially means that they're paying themselves about minimum wage just to keep the business going. They put in, 80-hour work weeks, and the business is just floating along. And that's really a problem, right? The person who's got the most on the line with the business should be getting, some more significant reward for their efforts. But because they don't know how to understand what's wrong with the business, they can only focus on doing. And they never take that step back to say, wait a minute, let me be the leader. Let me look at things from a more holistic view and see, where are the actual problems with my business? And what can I do to fix those problems? When you have that view, it's much easier to delegate those tasks and correct the issues that are cropping up.
Mm-hmm. And Avi, when it's come to the business and all, we have seen a a lot of classical style entrepreneurs, because they're trying to keep the bank account and the stock inventory and very important file always under their name. But in day-to-day activities, it's becoming a hindrance to the customers also. Let's say, for an example, a customer or a supplier came for a cash collection from the company. In a point of the owner is not exist there, so they cannot do the transaction smoothly because the bank and all under the name of the owner in a small, medium, large scale companies. So in this kind of point, the control of the business, how it should be, it should be a span of control, should be a centralized or it should be decentralized, which is the right way for the small, medium enterprises?
I mean, the more that the business owner can let go, then the more that the business can grow, right? Because if everything is falling on his plate, right, he has to approve every single bank transfer, he has to approve every single check that goes out to every vendor. You know, there's, like we said, there's only so much time in the day. How much can he get done when everything has to go through him, right? So you have to learn how to let go of a little bit of the control. Get people that you can trust, get staff that can really handle the tasks that you need them to perform in order to, you know, to let the business, you know, thrive. Right? Too many people are busy surviving. You need to learn how to let go so that you can also thrive, not just survive.
Yeah. And Avi, when it's come to the statistics or manufacturing industries, we have seen and witnessed a lot of businesses are doing the shortcut way. They do not opening or manufacturing the actual product, but what they are doing is ordering from China with their brand name and just kind of a distribution channel inside the country or outside the country. So the same thing is the Apple and this Nike also doing in a big scale. So the small companies also falling into the same copycat format. So how you viewing this point is actually not making the product as their plan, but somehow they're getting the product for a cheaper price, and somehow the customer is satisfied for a very short period. And how you viewing this kind of approach?
So I would say it probably depends on, you know, the quality control of the item, right? Are
Yeah.
you really getting a good product? You know, personally, I don't like when I buy something and it falls apart, you know, 2 months, 3 months later, or you know, the day after the warranty expires. Uh, so for me, that leaves a bad taste in my mouth, right? Why should I buy another one of these? You know, when I need one next time, I'll go to somebody else who's going to make it better. But
True.
if you can get good products cheaper, so you know, there's what to be said for that, right? If you to make sure that you have that you're making you're making a profit, so your business can keep going, right? If you're going to say, well, let me get something that's more, you know, let me build manufacture something that's bigger and better and, you know, more sturdy and whatever, and it's going to cost me too much that I won't be able to sell them. So then you might have a great product, but it's going to be sitting on your shelf. Nobody's ever going to buy it. But you know, it's a balance, right? How much am I able to charge for this product, and how cheap can I get it so that I'm actually making a profit on it, right? Because that, at the end of the day, if the business is not profitable, the business will go under, right? And it's not just a matter, you know, I want to qualify that. It's not just a matter of profit. It's a matter of will the business have cash on hand at the end of the month? Is the business able to pay its bills at the end of the month? So, you know, previously we spoke about revenue and a little bit about profit. There's also your cash flow that you have to worry about, and that's kind of the thing that's less understood by non accountants, non finance people. That aside from just the money you take in and the money you spend out, there are other factors at play that's going to affect your cash balance. For example, since we're talking about inventory and manufacturing processes, every piece of inventory that you buy is money that you spent out, even though on your income statement, there's no expense yet. Until I actually sell the product, there's no expense on my income statement. So I might still be profitable, right? If I put $100 into my business and I use 50 of it to buy inventory, so that's $50 of cash that just flew out of my business into the, you know, into the ether. But on my income statement, I don't see any expense yet. I see no income, no expense. So when I look at my balance, my bank account balance at the end of the month, I'll say, well, wait a minute, there was $100 in there. Why is there only 50 now?
Yeah.
Well, because 50 of it went from cash and turned into inventory.
Yeah.
Right. So you have to really be focused on your cash balance to make sure at the end of the day, when your bills come due, when you have to pay your vendors, pay your electric bill, pay for your office rent, pay for the next round of inventory, whatever expenses come down the pipe, that you have money on hand to pay those bills, because that's really the biggest factor that's going to determine whether your business can survive, the next month, the next year, the next 10 years down the road. Right. So focus on maximizing revenue, right? Become that 6, 7, 8-figure business that you want to become. Figure out your expenses so that you still stay profitable, right? So if it means manufacturing in China so that you can get a cheaper product that you can actually make a profit on, so that's great. But don't lose sight of your cash, right? Even if you, like we said before, there might be some companies that are playing games with their expenses to lower their tax bill. So they might not be profitable, right, from a tax point of view, but they still have the cash on hand so that the business can continue going down the road. So never lose sight of your cash balance. That's probably the biggest thing that causes business owners to fail, unfortunately.
Yeah. And Avi, when you talk about the cash flow, cash inflow, outflow, and we purchasing the material and the supplying chain and the manufacturing stuff and salaries and everything is involved in cash outflows. So cash inflow ways are mainly from entrepreneurs' personal own money they have invested and the bank loan. Or some people are using the credit cards, their own personal credit card for the business. So how are you viewing this point, and what point we need to take the bank loan or step into the third party to inflow the cash, or how the interest rate should be compared to the market, or how this thing will be tackled by the entrepreneurs?
So depending on the industry that you're in, I try to advise against taking on too many loans, because eventually those run out, right? Eventually your ability to take on more loans and to invest more of your personal capital, eventually that runs out. Again, doesn't mean there aren't certain times that it warrants it, right? There's certainly going to be, if you are just getting started and you need to buy your machines, so you might have to take out a loan at the beginning. If you're trying to expand your business and you have to take out a loan, that's certainly possible as long as the business is healthy enough to support the paying back of that loan over time. But in terms of the day-to-day, the monthly managing of the business, you want to make sure that your business is generating the cash by itself, right? That the revenue minus the expenses minus any other considerations that go on with your bank balance, at the end of the day, your business is producing a consistent positive cash flow. That's what I preach to my clients. That's the ultimate goal of a business, to produce consistent positive cash flow. You can then use that cash to continue to grow the business further, right? Again, there's certain times that are exceptions. There are certain industries that are exceptions, especially something that's more, manufacturing. Occasionally, you're gonna, like I said, you're gonna need to buy a new machine. If you're doing a lot of research and development, there's going to be a lot of expenses at the beginning before you can sell a single product, right? So anything that's technology related, anything that's medicine related, a lot of times there's going to be a lot of those upfront expenses before the cash comes in which case you might have to take a loan. That's just a reality of doing business in certain sectors, and that's fine, right? You just have to look at the business and say, is the business healthy enough to pay back this loan over the period that it needs to, or are we really risking something here that we might actually be bring ourselves into trouble by taking on an additional loan? So that's, again, something that you need somebody who can help you make that analysis and see whether your business really can handle it or not. Don't just jump in and hope that it's going to work out, but really take the time, get a professional, get a CFO of sorts to really do that analysis and see what can your business actually handle.
And Avi, when it's come to small, medium entrepreneurs or a small startup businesses, at what point they need to reach for a outsourced CFO or a companies like service provider or person like you who can handle the managerial stuff and all, at what point these entrepreneurs should reach the outsourced people?
So I would say when you can no longer handle it yourself, right?
Hmm.
There's going to be times at the beginning of a business where there's just not a lot going on, right? There's not a lot of moving parts. It depends on the industry. But let's say you're a contractor, you're an HVAC technician, and you decide to open up your own firm, your own practice. So if at the beginning you're building deck chairs and you're building pergolas and you're making your small projects where it's just you and maybe one other guy that's doing it, so you can probably handle most things by yourself. You might want to get somebody who you can check in with occasionally, maybe 2-4 times a year, just to make sure things are going normally. Once you're getting an office staff, you're getting more technicians, you're getting employees, so then you want to think, am I really on top of it? Do I really understand what's going on with my profit, my cash flow? Or is it time to really look and see, is there somebody who can give me a systematic approach to it? Personally, with my clientele, I look for people that are making about $500,000 per year or more. That's typically where I start looking for clients. But that doesn't mean that somebody who's making $250,000 or even $100,000 a year couldn't use some help, right? It depends on how complicated the business is. But again, if it's relatively simple structure, not a lot of moving parts, you can probably be fine with just finding a professional that'll meet with you once, twice, maybe 4 or 5 times a year, just to check in, make sure things look normal. And that should be okay. Once you get to being, kind of like $10 million a year, so then even an outsourced CFO might be a little bit too simplified for you. You might want to start thinking at that point of getting somebody who's more full-time CFO that's going to be part of the C-suite, part of your senior staff, and can really dig into the numbers on a more regular basis.
Mm-hmm. And Avi, I have tons of questions, managerial reports, and what kind of reports should be submitted, and weekly report, monthly report, and annual report, and all. We will talk about this all in our episode 2, and we will conclude this episode as episode 1. And I would like to ask as a final question, Avi, what is your advice for the young and the new entrepreneurs and startup people who are coming into market in 2024 right now?
As an entrepreneur, I would say learn basic accounting. Learn accounting 101. You need to know how to speak the language, right? And unfortunately, most accountants, most bookkeepers, they speak what I call accountanese, right? They don't speak English. So you have to know how to understand what they're telling you. You're going to ask them for monthly reports. You're going to ask them for yearly reports. You're going to look at yearly tax return. You're not going to, if you don't speak some modicum of accountanese, it's gibberish. It's going to mean absolutely nothing to you, and you're going to get no information out of it, right? And at the beginning, again, when the business is small, that might be fine. But you want to start building systems into place at the beginning, at the infancy of the business, so that it can continue to thrive and grow throughout the years. Right? You don't want to have to be taking your business from startup to a more 5 years down the road, and then start being like, oh well, we should probably start understanding things now. Now you want to start from day one to try to understand it. Take a beginner course, principles of accounting, and just learn the language of business from that point of view, so that you can understand that information that comes in, and you can use it to make better decisions going forward, instead of kind of guessing what it is that your business needs.
Yeah. And thank you very much, Avi. And we have discussed much about the entrepreneurship and the startups and how the business should be built up and the market trend right now and tech companies. And we have discussed a lot of things in this short time period. Thank you very much for joining in our show.
Thanks for having me.
Giving your experience, helping a lot for the listeners, to be frank with you. And Avi and I will put your link in the description under the video, and anyone who is hearing this conversation can reach Avi, and he's from Jerusalem right now. And we'll continue this episode by episode 2, 3, and 4, and we'll keep continuing. And Avi, what do you think?
Sounds good. For sure, yeah. And if anybody wants that, I have on my website, there's a prosperity playbook that people can request. It's a simple Excel document that any entrepreneur can use, and they can use that to kind of look at their numbers in a systematic approach and understand how to focus on which aspects of their business they should be focusing on when they're trying to grow and scale.
Okay. Thank you. Thank you very much, Avi.